Hello, welcome to the Forex News Preview for Tuesday, February 26th. I'm Rafi Berjan, currency analyst at XM.com, and today we're going to be previewing the Eurozone data that's due this week. So we're going to have two important economic releases out of the Eurozone. First, we've got the economic sentiment indicator out on Wednesday, to be followed by the flash inflation numbers for February on Friday. Looking first at the economic sentiment indicator, the index had fallen to more than 2-year low in January, reflecting the deteriorating growth picture in the euro area. Other surveys, in particular the PMI, had also been strongly suggesting a severe downtrend. We are seeing some signs that the slowdown could be easing, though a turnaround is quite some way off just yet. The economic sentiment indicator is forecast to drop further to 106.0 in February. Let's now move on to the flash inflation numbers that's due on Friday. The headline figure is expected to edge up from 1.4 to 1.5% year on year in February. So this might please the ECB. However, the underlying inflation numbers are still very subdued. The two core measures that the ECB keeps an eye on are forecast to come in at just 1.1% year on year, far below their target of close but below 2%. So this means that the ECB is widely anticipated to discuss at their next meeting on March the 7th whether or not to launch a new round of cheap long-term loans for Eurozone banks that would encourage lending in the region. So it's unlikely the ECB would follow some other form of stimulus, given that they just ended their asset purchase program. So this would be the only the main option that's currently available to them. And we've seen a series of ECB speakers in recent weeks point out how much they're surprised by the extent of the slowdown in the Eurozone, and eventually we could even see the ECB planning, slowly signaling to postpone the planned rate hike for after the summer of 2019. And quickly looking at the technicals, we can see that at the moment there is strong resistance for euro-dollar at the 50% Fibonacci retracement of the downline from 1.1515 to 1.1231. If you do get some encouraging figures this week, euro-dollar might be able to break above that key resistance area. However, if we do see disappointing numbers, we could see euro-dollar falling towards its 50-period moving average at 1.1325. So that's it from me. Thank you very much for watching and have a great day.